All right, thank you so much for staying with us. The Nigerian stock market consolidated its upsurge last week as investors responded positively to reassurances from the Honorable Minister of Finance and Coordinating Minister of the Economy, Mr. Wale Edun, regarding government's position on the capital gains tax in the capital market. The clarification helped restore confidence across the investment community, reversing the Tuesday's trading sharp decline and fueling renewed optimism amongst institutional and retail investors alike. Further bolstering investor sentiments were insights shared on X, formerly Twitter, by Mr. Taiwo Yedele, chairman of the Presidential Fiscal Policy and Tax Reforms Committee, who provided additional context on the government's intent. He emphasized that the policy review was not designed to stifle market activities, but to promote fairness, transparency, sustainable growth within the capital market ecosystem. Speaking on the same development, Mr. Temik Popola, who is the CEO of the NGX Group, said, and I quote, "The rebound witnessed in the market reflects renewed investor confidence, underscores the inherent resilience of Nigeria's capital market. Recent policy engagement and assurances from fiscal authorities are easing concerns and restoring momentum across key sectors." My guest is Dr. Ayodeji Ebo. He is the Chief Business Officer, Managing Director, Optimus by Affirms. Thank you so much, Dr. Ebo. It's good to have you this afternoon on Business Nigeria.
Thank you for having me. Good afternoon.
Yes, I think I would first like you to react to what we saw in the market immediately after the CGI issue came up, before the minister gave assurance that, well, we'll look into this issue. We understand there are concerns, but we saw what happened. About 4.6 trillion naira, around about that, left our markets almost immediately. Or a day after the minister spoke to the market participants, well, the market rebounded. Now, tell me what you make of that activity and what do you think needs to be done to address these concerns?
Okay, thank you very much, and it's great to be here. So if we look at what happened within those days, first of all, I think beyond the comment from the Minister of Finance, it's also the clarity that the chairman of Presidential Tax Committee, that's Mr. Taiwo Yedele, provided that same day, which is the cost basis. The concern of most of the investors then was that if I don't sell my stock this year, means next year I would have to pay government taxes for the gains I've acquired over the past years. But with the clarity that there would always be a reset. So it was that December 31st, 2025 price, or the price as at the end of that or the previous year, or the higher between your cost price and that of December 31st of the previous year would be used to calculate the profits. You know, we're talking about capital gain tax, so it is solely on profit. So that provided a lot of clarity. So if I bought GT Bank at 20 naira 4 years ago, and at the end of this year, if it's closing at 100 naira or at 90 naira, next year, if price increase to 120, I will only be paying tax, CGT, on the 20 naira difference, not on a difference of 90 naira. That really created a lot of clarity, and we saw that particular impact in the market. What we are seeing now in the market is just end of year sell-off. You see portfolio managers, when you look at those that have taken position in first quarter, second quarter, they will definitely be in the money. And for them to be able to turn their gains into actual gains, that's what we call paper profit into actual gains, then they need to also sell. But we are seeing volume. Today, we saw about 18 billion value in GT Bank alone. Investors are still seeing value, but we can see that clarity also matters when policies are decided or are made. So that actually spoke the market, but we're already seeing a bit of confidence. Yes, why there's a bit of sell-off, but not that the market was on a free sell-off that we saw before the clarity and the statement by the Minister for Finance.
I'm thinking that do we need a more of enlightenment, awareness with regards to these tax laws, because many will still come up even on social media to ask questions about clarity with some of this. Do you think that there needs to be more of education, let Nigerians understand really what government intends to achieve with these new laws as we move towards implementation in a matter of weeks?
Yes, I think I will agree, and I can also give kudos to the chairman of the Presidential Committee, Mr. Taiwo Idele. I've attended several seminars that he has tried to also explain it. And even for me, I've held more than 10 different webinars to explain what this means. That means that there's the gap. In Nigeria, we are not used to taxes, apart from the payee that is deducted from salaries. Some of us also pay stamp duty, VAT when you go to restaurants to eat, but most people don't pay attention to that. So for most investors now, the CGT have always been in play, but has not been enforced. It used to be 10%, but has never been really enforced. So now coming to talk about it with also the review of the tax law, a lot of Nigerians are apprehensive. And when you, even for those that may not be affected, but because when you look at the CGT, the capital gain tax, for instance, if the total turnover of your shares, that means the total sales that you are making in a year cumulatively is not up to 150 million, and the profit on your investment is not up to 10 million, then it doesn't actually affect you. Yes, you can understand it so that when you get there, you begin to plan. So, but you will see that for most of those that are also very worried, doesn't even get close to that particular threshold. So there's a need for more enlightenment. Even for some of the documents or the explanation may also want to be done in the indigenous language that people understand, broken English, different type of ways, maybe also using comics that people will relate with. Even you want to produce videos that would be relatable and be able to explain this, because this is a new culture that we're trying to build. And there's a lot beyond trying to collect the tax. There's the administration. People don't know, when do I need to file? How do I need to keep my records? There's a lot. And tax, like I said, because as a professional accountant, I did UK tax. It can be very boring. And there's a need to break it down, make it interesting for people, so that why there's concern on the utilization of the taxes.
Drive investor confidence that is expected, in Nigeria's capital market. And aside equities, what else would you say would be, interesting for anyone to want to invest in? Aside
individual stocks, you buy that basket. So there's a need to increase liquidity within that space so that participation can also be more within the exchange traded fund markets. So I know the exchange is trying its best to see how they can also bring in derivatives. So, but there's a lot, as investors, the investors are even still trying to understand stocks. But when we talk about the foreign investors, they are already knowledgeable in this space. And if they see the value, they see the liquidity. Liquidity is about the ability to exit when you desire to, not getting stopped. So there's a need for us to deepen our markets. If they bring in significant funds into the market, it can artificially propel prices if we don't have significant more stocks that are listed, and also in terms of the value of stocks that are listed in the market. So I think that, yes, there are enough opportunities, but there's a need to intensify effort in other products that would also be able to attract investors. Options, you see in the US, that trade, you're able to short stocks because you expect that market will come down. is creating activity, because as you are trying to, you have that belief that market is coming down, you are shorting, some people are going long. Those are on the same instrument, you are creating a lot of activity on it, and that would increase the value of transactions that is being done in our market. So we will need to intensify efforts. I know a lot is being done around that, but life is about the result. We need to begin to see that result, activity within that space. And once we begin to see it, we would see that interest in the market becomes more interesting, because most investors have different risk levels. Some may prefer to trade options. Some may want to trade the main instruments.
Great answer and analysis as always. Now, before I let you go, Dr. Ebo, we are aware the big meeting is on in Abuja. That's the last for the year 2025. I think the next MPC meeting we'll be having will be in 2026. And the decision of this very meeting determines a lot as we move to the end of the year. What are your expectations? Tell me.
Okay, so I would expect that the CBN would continue its dovish stance, and projecting that between 50 to 100 basis point cuts, just to signal that they want to keep rates very low, based on the sustainable way we've seen in our inflation rate. We've also seen the exchange rate has also been fairly or relatively stable. So CBN will want to consolidate, or the MPC rather, will want to consolidate on that. Yeah, so I think that I'll be going more for a cut rather than holding the rates.
Considering even the fundamentals, inflation 16.05%. Yeah, go ahead.
Yeah, so I'm saying when you look at inflation dropping by over 200 basis points, that also reinforces that there's a need to also allow the fixed income markets, especially the MPR, which is the reference rate, to also reflect what is happening. When you look at average fixed income rates, at average of, it's below 20%, whichever market instrument you are looking at. So there's a need to begin to make that MPR relevant. If not, it will just be like a dummy rate that does not actually reflect what is happening in the market. So we think that they would want to begin to make it more realistic and close to what is happening in the market, given the achievement that have been sustained within both the FX market as well as the inflation market. But we shouldn't lose sight that when you look at the inflation rate on a month-on-month basis, with short-term inflation rate, there's still pressure. You see from 0.93 to about 0.23 on a month-on-month basis. That's comparing October to August. Yes, the pressure is still there, but given the base effect, that is one of the major factors for the lower interest rate that we're seeing these days.
Dr. Ebo, I must thank you so much for your time on the program this Monday afternoon. We really do appreciate it. Have a great and profitable week.
Thank you for having me.
All right then.